Stocks versus cryptocurrencies are two totally different investment assets. Both of these are generally liquid assets that have their own respective positions in your digital portfolio. Similarities pretty much in there. First and foremost, we have to identify what actually a stock is, and then we have to identify what cryptocurrency is, and then we have to differentiate the differences and which one would be a better investment heading into the year 2022. I remember going into 2021, stocks were all the rage, especially after the pandemic. Robinhood was an app that was on the come up, and everybody was using Robinhood like crazy. As time has progressed and we've gone closer and closer to 2022, a lot more people have drifted away from Robinhood and have been using apps such as Coinbase to invest in cryptocurrency and boost their portfolio in that way. Today we're going to uncover the differences between each digital asset, and we're going to personally determine which one would be a better investment moving forward into the year 2022 and which one you might want to stay away from. What's good, YouTube? It's your boy Campbell, and we are back with another video. Now, first and foremost, if this is your first time on my channel, I just want you to do me a quick, simple favor. Please hit that subscribe button, as well as turn on that notification bell to be notified anytime that I drop some content. And while you're at it, please leave a like down below. It helps the algorithm, it helps my channel continue to grow, and it pushes my content out in front of more and more people. And if this isn't your first time on my channel, I just want to say welcome back to the trenches. It's your boy Demetrius putting live, and I got some great content for y'all today. Now, first we're going to talk about what stocks are, and we're going to identify what exactly a stock is. Stocks represent ownership in a publicly traded company. Each share of stock you buy confers to a percentage of ownership in the company itself. You receive this ownership in proportion to the number of shares that a company has issued. For example, let's say that XYZ Corp releases 50% of its ownership in the form of 50 shares of stock. If you buy one of these shares of stock, you literally own 1% of XYZ Corp. While uncommon, when a company has released more than half of its ownership in the form of stock, it is possible to acquire a firm simply by purchasing enough of its stock. An investor can make money by selling their stock shares to their other investors. This is known as capital gains, the difference between what you paid for the asset and what you're getting from it. Beyond that, the benefits that you get from owning a stock depend entirely on the individual company involved. Stocks can also gain value by paying dividends to their investors through voting power held by shareholders and by other rights of ownership. Every individual company is different in terms of how or if it handles issues in the dividends and shareholder voting rights. Now, secondly, we're going to identify what a cryptocurrency is. Give you a quick rundown because we all kind of understand cryptocurrencies in terms of like DeFi coin, Bitcoin, Ethereum, Dogecoin, Shiba Inu, like the list goes on and on. But do we actually know what cryptocurrency is and what its purpose is for and what it's used for? A cryptocurrency is a purely digital asset. That means that it has no physical component, but rather exists only as entries in an online ledger recording ownership. This, for example, as opposed to the US dollar, which has both physical component, which you can withdraw and hold a dollar, and a digital component, you can own a dollar as nothing more than an entry in your bank account. The individual unit of cryptocurrency is called a token. In that same way, the individual unit of a stock is called a share. Cryptocurrencies come in two main varieties. Some, like the well-known Bitcoin, are intended as pure currencies. They exist only for people to trade, buy, and sell. Others, like Ethereum, are what we know as utility tokens. These currencies function as more of a complex piece of software, though utility tokens are also meant to be bought, sold, and traded. At the time of this recording, there are several thousand different cryptocurrencies in circulation. So now that we've explained what a stock is and a basic generalization of what a cryptocurrency is, now we must discuss the differences. For an investor, there are critical differences between investing in cryptocurrency and investing in stocks. However, a threshold matter, it is important to understand that this video is merely a brief introduction to the issue. You could write volumes on the nature of crypto versus stock investment, and people have. However, a few of the most important differences are both stocks and cryptocurrencies offer thousands of potential investment opportunities. These markets are not necessarily as diverse as they appear. At any given time, somewhere between 55% and 70% of the entire cryptocurrency market is tied up in Bitcoin. That one asset dominates this market in a way not seen among the stock market, where almost any company could potentially have valuable investment. That said, stock markets get too proud of this distinction. While no one stock market dominates its market, there are several similarities in these stocks. These 5 companies, Facebook, Apple, Amazon, Netflix, and Google, make up roughly 1/5 of the entire S&P 500. It isn't the dominance of Bitcoin, but investors should be aware of the similar market capture dynamic. Cryptocurrency is likely the most single volatile asset in which you can invest in. This is true of both individual assets and that market at large. Whether you have purchased Bitcoin as an altcoin, crypto is a roller coaster. assets can triple in value and then lose it all within the span of a single day. Investors can make a fortune that way, but to be sure, they also can lose more than they put in. Individual stocks almost have a far less volatility than cryptocurrency, but they're still not stable. In fact, until crypto came along, and shares in a single stock were generally considered the most volatile investments that you could make. However, despite the random walk of individual assets, the stock market as a whole tends to be generally stable and predictable. It generally moves slowly, so much so that big changes in the stock market as a whole make the news. If you want a stable asset, an S&P 500 index fund is usually a safe bet. If you want a speculative asset, an individual stock is a good choice. If you want an extremely volatile asset, cryptocurrency can serve that role as well. Now, in terms of profit source, this can just depend. You generally get profit off of stocks in one of two ways. One, you can make capital gains by selling your shares to investors. Or second, you can just hold on to the stock and collect dividends off of that stock. From time to time, a company could possibly even buy back its share of the stock, and you can make money through it in terms of capital gains. In terms of cryptocurrency, you literally can only make money off of capital gains, meaning whatever you invest in, eventually you have to sell it, because no matter what you're holding on to, even if you bought Bitcoin at $1 and it's skyrocketed up to $60,000, you've made money, but you don't actually physically get that money until you actually sell it. So capital gains is the only way you can make money off of crypto. Stocks are more grounded in the context of there is a base generalization of what a stock is and the companies that hold them. This in turn creates a fundamental analysis on that stock's value. You can pretty much determine the underlying value of what a company is worth based off in stock, and then you can determine what you're going to do with it. You can either hold on to that stock shares and make dividends off of it, or you can sell it to investors and make capital gains. So stocks have the edge in terms of that because there's more than one way to make money. In terms of cryptocurrency, there's only one way to actually make money. Because cryptocurrencies also are a decentralized chain and there's not a centralized system for them, cryptocurrencies fall behind the 8 ball as well in terms of trading. The stock market has been around for a lot longer period, therefore it makes it a lot more tradable and a lot easier to trade. The stock market is a large centralized market. Like the New York Stock Exchange, for example, is one of the largest stock exchanges in the world, and I think it's the largest one in the US. And that is an example of a large centralized exchange in which the cryptocurrency world we just don't have yet. And if we're talking about scams, crypto also falls behind the 8 ball because I think crypto is by far the biggest and the easiest way to scam because it's purely untraceable also. You have people like rappers and entertainers and certain people who actually know nothing about crypto and blockchain, and they're creating these coins and people are investing a ton of money into them, and these things are completely flopping because they have no real use. They're just like meme coins in a sense where they're just like, hey, here's the face of a coin, but it actually has no real value because it has no real purpose or use in the world. Compared to the stock market, you have to be a legitimate company and have some value. Now, if your value crashes and things of that nature, I wouldn't consider that a scam. That just means, hey, you've had some bad luck or things have gone completely left, but you can't call it necessarily a scam. The cryptocurrency world is literally full of scams. The bottom line of this video, if you want to ask, cryptocurrency is more boom or bust. It's newer, it's fresher, and you have opportunity to really kind of blow up overnight, but you can also lose everything overnight, which is a little less common in the stock market. If that's what interests you in terms of the boom or bust appeal and not knowing what could happen and being able to kind of explode and blow up overnight, then I think crypto's the way to go. If you're looking for the more slow and steady approach and you have time and money to put to the side, I think the stock market might be a way to go. It's been around a little bit longer, it's a little bit more established, and again, it's more centralized. If you're looking for a mixture of growth and management, the stock market is easily going to be the way that you should probably look into because it's also less volatile as well. But that doesn't mean it's not volatile, it's just less volatile than cryptocurrency. My personal opinion, I'm still all gung-ho on the crypto market because I don't even think we've seen the tip of the iceberg of what the crypto world is going to unveil for us. In terms of the stock market, it's been around for a while, so we've kind of seen what it can do. The crypto world, it's barely showing its head. I think in the next 10, 20, 30 years, the crypto world is going to be so crazy that it just, to me, is a lot more exciting and it's a lot more worth my money. And crypto is just a lot easier to buy. Like, we have to be honest. Granted, To buy crypto, you do got to give up all your social information, your social security number, your address, your work history. They be asking for a lot, tax information. But crypto, you just have a lot more ways to buy crypto in terms of apps and websites available. But the stock market, there's really only a handful of ways to actually buy stocks, that making it a lot harder. And in my opinion, I've used Robinhood, man. Robinhood is trash, bro. Like, I don't know, Robinhood is a finesse. I'd much rather stay on Coinbase and other apps geared towards that, because they will not scam me or finesse me or hold on to my money. If you haven't seen that video, check out my Robinhood video. But that pretty much wraps up today's video, y'all. This is a quick, easy video. We're comparing stocks and crypto and seeing which one is a better investment moving forward in 2022. Again, I can't make this extra for you. I say this a lot of my videos. You have to do your own research. You have to apply the methodology and the plan of thinking that applies best to you. Everybody's situation is different, and it depends on what your goals, your plans on, and your personality and nature. That's going to determine what you're going to do moving forward. So if you found this video educational, entertaining, or informative in any way, shape, or form, do me a favor. If you haven't already, please hit that subscribe button, as well as turn on that notification bell to be notified anytime I drop some content. And while you're at it, please leave a like down below. It helps the algorithm, it helps my channel continue to grow, and it puts my content out in front of more and more people. With that being said, man, I just want to say I appreciate y'all. I thank y'all. I love those who love me, and I'm gonna catch y'all back in the next video.